Hey everyone, welcome to the Trendline Invest channel. Today we're going to look at five different companies from three different sectors or three different categories. One category is the IPO segment. Basically, I'm going to look at one company which grew its sales grew its PAT by 72% for the last 3 years, by 72% each and every year. Then three companies from the refinery space and one company from the battery space. Now, I'm going to also discuss why these stocks are excellent from a technical perspective. Also, for the IPO company, I'm going to discuss fundamentals because it looks really, really good. And I hope you're going to enjoy this video. So do stay till the end of this video. So let's get started. First with MapMy India. MapMy India was recently listed last year in the markets, and it has been trading down for the last 1 year or so. But what has changed in this company, or at least what the company has been doing really good, is in terms of performance. The company reported its annual numbers just last week, and the numbers have been phenomenal. So I'm going to take you through the fundamentals before I jump into the technicals for MapMy India. So let's get started with the fundamentals of MapMy India. And primarily, this company sells a similar software, just similar to Google Maps. So it has two brands. One is MapMy India, which is sold in the Indian markets, and one is Mappls, which was recently released, and it is sold across the world. Basically, any maps across the world comes under Mappls. So this company operates in two different segments. One is the automotive segment and the mobility segment. The other one is the consumer tech and enterprise digital transformation segment. Now, keeping what these segments are aside, I want to cover in terms of the performance or in terms of the growth, how these segments have done for MapMy India. The first segment, the A&M or the automotive space, the company grew its revenue by 34% year on year and almost 2% quarter on quarter. And in the consumer tech space, the company grew its revenue 48% year on year and quarter on quarter grew its revenue by 80%. Now that's some staggering numbers or like fantastic performance by this company. And also another thing to note here in this business update here is 1.9 plus million vehicles went built in with MapMy India Mappls in financial 2023, which is up 46% from 1.3 million during financial year 2022. Now remember, this is just 1.3 million, whereas this company says it has a huge potential, almost 10 to 20 times this size, and there's not many players in the Indian market, and it thinks it can capture a huge market share in this space. Okay, so that's the market segment update. I also want to give an update on the product-wise revenue of this company. Now, this company has primarily two different products. One is the maps and data, and one is the platform and IoT. Now, if you look at the maps and data, primarily where you have MapMy India and Mappls, it has grown its revenue by almost 27% quarter on quarter. And if you look at the financial year 2022 for map and data, they've grown it almost by 34%. And for the platform and IoT, which is relatively a new business, it has grown it by 45%, which is also a very, very good number. So moving on to the order book, which is also a very interesting aspect to look at for MapMy India. The order book has grown almost by 30% financial year 2020-23. So they've gone up from 700 crores order book to 918 crores. Now look at the growth in that order book from financial year 2021, right? They almost tripled the order book, almost 2.5 times the order book has increased from financial 2021, right? That's some phenomenal numbers. And just giving you a idea of what the customers are or what kind of customer growth they have had. So basically 54% of the customers are contributing to 80% of the revenues. Now this has been just 25% before, which shows that the revenue is now coming in from more customers, which means the risk of this company not making revenues is very, very low. Or basically they're de-risking their business by having more and more customers. Now, the other point I wanted to note here is also the retention ratio, right? So almost they retain 91% of the customers are retained and they keep giving recurring business. Now, which means when this company sells a lot of hardware plus software, and the software is primarily a subscription business. And if they keep renewing and if their customer base grows widely, then probably they're going to have much higher revenue in the next 5-10 years. Probably it could be a multi-bagger stock as well. Okay, so yes, just you can go through these things. It is available on their annual reports. But what I want to give you a summary of this company is the financial numbers. So overall, the total revenue from operations has grown up by 40% year on year, and quarter on quarter they've grown by 27%. EBITDA margin is around 37 point. EBITDA has grown by 37%. year on year and 26% quarter on quarter. And the EBITDA margin has increased by 110 basis points. All right, now that's phenomenal, which shows that this company is basically, as and when it's selling more products, it's able to generate much higher operating margins, which in turn results into much higher PAT, right? So PBT also has grown by 19% here. Also, PBT has grown by 380 basis points. Also, PAT has grown by 23%. So overall, for me, this is an excellent company, I think. So I think it's trading at a very high PE right now, and that's primarily because of the growth that the company is having. Now let's take a look at the technicals. Now, this stock has not done much in the last 1 year. So it was listed in 2021, I think December somewhere, and the stock has been in a continuous downtrend. The stock was listed around 1900, 2000 odd levels, and today it is trading at around 1100 odd levels, right? It touched 990 here, but then the stock jumped after the results. It did really well in the last few days of this week's closing. But overall, the stock is still in a downtrend. Now, that's very, very important to note because this stock can keep going down. But the maximum risk I see in this stock is probably 900. I think it shouldn't go below 900. So do take a note of this. And if the stock hits 900, probably it's a very, very good buy. Okay, but for now, I am expecting the stock will break out from this pattern over here. And if we break out above that level of 1200 over here, which is this zone over here, if you break out from that level, then we are probably going to enter a multi-year uptrend, and the stock most likely will not come back to the levels below 1000, I think, forever. Maybe. Okay, that's my bold guess. But I think this is a very good buy at current market price. The volumes have finally risen after many weeks. So we've not seen this kind of volume in the last many weeks. In fact, the last 9 months, the volumes have not been this great. Plus, we had a very strong bullish monthly closing along with a weekly good closing as well. So the stock can be bought at 1100, which is current market price, with a stop loss of around just 11%. Now, if you're conservative, keep a stop loss of 900 and just wait and see. If it comes to 900, you can buy more. Or if it breaks out about 1200, you could also buy more. So we're looking for targets of 1900, which is 73% from the current levels. But the stock can probably head to much higher levels in the next 5 years, can probably head to even 5000 or 6000 levels. Okay, it all depends on whether the company can maintain its growth, how the company is able to acquire new customers, and how it can upsell its products to the existing customers. Okay, so that's the first company. I hope you like this analysis of mine for MapMy India. If you did, don't forget to subscribe and like this video as well. Okay, so let's move on. It's a very interesting sector today that we're going to look at is the refinery space. I'm also going to tell you from where I've got these stocks. Now, MapMy India came from the weekly scanner. Now, this is the only scanner I have, and I don't have any other scanners. I primarily believe that you need to have a simple strategy in order to succeed in technical analysis, and that's why I have just single dashboard with 4 scanners. So I got MapMy India from here, and the next 3 stocks we're going to discuss is from this scanner over here, weekly crossing 100. So the stocks from the refinery space. I already tweeted about multiple stocks from the refinery space like Chennai Petro, MRPL. They've done very well. Now, 3 of the stocks which are about to break out is from this scanner. It's going to be BPCL, Hindustan Petroleum Limited, and IOC. Okay, so those are 3 stocks, and let's get started with first the custom index. Okay, now whenever you look at a sector, you want to also understand what is the trend of price action in that sector, right? So for that, if you do not have an index, like in refinery space, we do not have an index, whereas for Bank Nifty, we have an index. So if you want to analyze the Bank Nifty trend, you can use Bank Nifty. But for a sector like refineries, when you do not have an index, you can also prepare your own index. Now here, what I've done is I'm teaching you how to create a custom index for the refinery space. So what you have to do is you have to go to Trading View, click on symbol search, and just type here the symbols that I have shown here. So basically what I'm doing is I'm adding the symbols BPCL plus Hindustan Petro plus IOC plus MRPL plus Chennai Petro. So when you add all of these, you're primarily going to get, or you're basically going to get an index which will look like this. Now here, if you look at my top left corner, you have 5 stocks here which are added up, and then you have the entire index which is charted here, right? Now what this index tells us is this stock basically went up from 2014, it had a massive run up until 2017, and then since then it has been going sideways. And now it's forming a major consolidation. And here, if you see, we are seeing a very tight consolidation for the last 1 year or so, right? For last 2 years, this index has not done much. The space itself has been consolidating. But this month, we are having we had excellent closing this month. And I think we are probably going to break out probably next few weeks, or probably it might take a month or so. But I think this is a very, very good bet if you want to get some good returns in the next couple of years. For that reason, I'm going to focus on this sector today. I have three stocks from this space. Let's start off with first Hindustan Petroleum. So Hindustan Petroleum also has been in a very, very strong downtrend since 2021. It has been going down. If you look at those pivot points, the pivot points I have here, it has just been trending down continuously. And now we have broken out from this trend line over here. And now we are forming a nice, beautiful base here for the last few months or so, right? Also, CCI has now turned bullish. Also, relative strength has crossed over the 52-week EMA for the first time in many, many months, right? So for that reason, I think Hindustan Petroleum looks really good. And if we kind of break out above that zone here, then I think we can head towards targets of around 350, which is here. And the stock might do well probably next few weeks and months. So you can buy the stock at current market price, which is 250 odd levels, or you can buy also above this point, which is 260 levels, right? Keep a stop loss of 12%, which is 220. And we're going to look at targets of 350, which is this zone over here, the highest point over here, right? Now, easily we should achieve that. If we break out, we should achieve that in the next 1 year or so. It might come earlier as well. It might take some more time, probably 2 years or so, but I do not predict all of that. Go with the trend, put some money, 5%, and see how the stock does. Okay, so that's the first stock. Let's move on to the next stock, which is Bharat Petroleum. It has an almost similar structure here, but just that I love this pattern over here because this is an ascending triangle setup. Right now, if you see, we have this beautiful horizontal resistance, and then we have this nice ascending upward trend line here, which basically forms the ascending triangle pattern. And we've already broken out here. This is the only stock which has broken out from the three stocks I'm discussing from the refinery space. And I think we might eventually head higher and reach those targets over here. So again, it's a beautiful downtrend. And I think breakout here, CCI is bullish, RS is also bullish. These are two indicators that I use. And I think if we kind of head higher, we're going to head towards levels of 500, which is that recent swing high which formed somewhere in 2021, right? So that's the target I have in Bharat Petroleum. So you can buy at current market price, stop loss of just 9%, which means you can get a very, very good position size. You can also invest 10% if you're a little aggressive, and you can see targets of 500 in the next year or so. Okay, so that's the third stock. So the fourth stock for today is IOC, or Indian Oil Corporation. Again, a nice, beautiful trend line resistance over here. Now, this is a significant trend line resistance, just like the other ones we had, because we had three touch points. And if we break out, then that trend line is a very, very important support zone. So once we break out above this zone over here, then we're going to probably head higher in the next few months. Also, again, CCI is not bullish yet, but I think it will break out next week once we have a good closing. But relative strength has been very, very good. Now, compared to others two stocks, this stock has done really well. It's just that we've had some nice consolidation over here. But relative strength has been doing really well, and I think this stock will perform very well in the next few months. So you can buy the stock at current market price, which is around 81.5. Stop loss is the least of all. It's 7.5% stop loss. I'm going to look for targets of 110 or even much higher levels. So try to ride the trend as much as possible, and you might get some higher returns as well, probably 150 levels in the next 2-3 years or so. Okay, so these are the three stocks from the refinery space. Now, the entire space, I'm not sure what is the fundamental reason behind why we are seeing a breakout, but usually fundamentals tend to follow technicals, and I'm sure we'll get to know the news of why refineries will do well probably in the next few weeks or so. Okay, now let's keep that aside. Let's move on to the last stock we have for today, which is the battery stock. Now, I did this video somewhere in November 2022. I discussed Exide and Amara Raja, and I said why these two stocks are very good bets for the next two to 3 years from a fundamental perspective. I also compared. So if you have not watched the video, do check it out again. But today I have this stock, which is Exide, and I'm going to tell you why Exide is again looking very, very good, and it has entered a long-term uptrend, and it can really give good returns in the next few years. So let's take a look at the technicals here. Now, Exide, I covered this somewhere in November when we had a breakout over here. But then since then, the stock went up, and then we are kind of going sideways. Now, what's happening here is this stock actually had a 4.5-year trendline resistance breakout somewhere here, and it is just going sideways for the last few weeks, right? And now finally, we are crossing above those previous recent swing highs we made. And also, this is a 1, 2, 3 trend change as well. So we had the first point over here, we made a low, and now we are breaking above that recent swing highs. So this stock is changing the trend, and it's now entering a very long-term uptrend. Also, as always, CCI also is looking bullish, and relative strength has turned bullish since that breakout in November. So this stock is probably the next sector or the next stock to focus on from a core portfolio perspective. This was because the fundamentals are very good for this company, and I think Amara also will do well along with Exide. So you can look at either of these stocks, but I think right now Exide is outperforming Amara, and I think it'll do well going forward. So you can buy the stock at current market price, which is 196, stop loss of just 13.2%, and we're going to look for at least 50% returns from here, which is around 300 levels. Again, if the company does well in terms of fundamentals, and we can expect much higher returns also. So which gives us around 4 times the risk we're taking. And that's the last stock for today that we're discussing. I hope you like this video. Again, don't forget to subscribe to my channel and like this video as well. I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.